Hey, Zach.
Yeah.
So we're literally about to launch Carbon Collective. We should really send an update video to everyone and let them know what we've been up to.
Yeah, it's been a minute.
I'm ready.
Hello, friends. Hello, family. Hello, extended network. Welcome to the first ever Carbon Collective video newsletter and long-awaited update. For those who don't know me, my name is Zach. That was my co-founder, James, and we go way back. We've known each other since we were 4 years old. Today, we want to catch you up on where we've been and what we've built. So in a second, we're going to jump to James, who's going to walk you through our journey of 2020. Then we'll come back to me, and I'll talk about Carbon Collective and fill you in on our investment platform. And finally, we'll go back to James to talk about the general structure of what you can expect for these newsletters, and then the articles that we have in this edition, and why you should care about them. James, over to you.
Thanks, Zach. At the end of 2019, Zach and I decided that we were going to start a company that was all about addressing climate change. So the first thing we did was we reached out to our friends and family and sent a survey to try to understand people's relationship with climate change a little bit better. We sent it out to about 200 people and we got almost 700 responses back. And in those responses, we found some interesting things. 3/4 of us felt high or very high levels of anger and anxiety, with over half of us feeling low levels of hope, when the vast majority of us took some action, but only 9% of us felt like we had done enough. And 1/4 of us didn't even know what to do. So we were like, let's dig into that a little bit more. And we conducted 120 in-depth interviews. And in those interviews, we saw some trends emerge.
One of the hardest places we found for people to align their lives with solving climate change was actually their retirement funds. And this makes a lot of sense. We save for retirement so that, say for myself, in 35 years, when I stop working, I can live comfortably and securely with the money that I've put away. That goal is really threatened by climate change because regardless of how much money I have saved up, if the world around me is going through accelerating climate change, it is not likely that I will feel secure and comfortable. So we dug in on the research and looked at every way that you could invest your retirement fund in a way that would meet your long-term financial goals, but also align with retiring into a world with a stable climate. And the best way to illustrate what we found is actually to illustrate it. So let's jump over to the whiteboard. This is a representation of the US stock market if you're looking at it through the lens of climate change. About 17% of the stock market is made up of companies that are actively making climate change worse. These are either companies who are extracting fossil fuels and powering that industry, like ExxonMobil, or industries whose core business relies upon burning of fossil fuels, like airlines. 3% of the stock market is made up of companies who are actively making climate change better. This is companies like Tesla with electric cars, also solar, wind, LEDs, better insulation, building automation. There's over 100 companies in this category. And then finally, there's the rest of the stock market. The majority of the stock market is actually made of companies like Google. And let's be clear, companies like Google are not carbon neutral, but they also don't depend upon fossil fuels for their core business. If we were to wave a magic wand and have our society suddenly transfer to one that does not run on fossil fuels, Google wouldn't change. It would just not have a carbon footprint. And that's actually true for the majority of the stock market. So when you look at the stock market this way, it becomes really easy to group what are the existing options out there for investing your retirement fund in a climate-friendly manner. The first are investment funds that are specifically green focused. These are great because they are totally aligned with solving climate change. But the problem is that they're really heavily focused on this category. And let's be frank, you're not going to invest all of your retirement fund in just solar stocks. The second category of funds are ESG funds. These are better in that they are far more diverse than green funds, and they also tend to have lower fees. The problem that we have with ESG funds is that they're measuring companies across all ethical parameters, which means that their criteria get pretty watered down, especially when you're looking at it from a climate perspective. There are plenty of companies whose core business is completely reliant upon fossil fuels. So in every fund we looked at, we couldn't find a way to fit it into a retirement plan that met both of our financial and ethical values around climate change. So we built our own. At a high level, our approach is really simple. We cut out the companies that are actively making climate change worse, see ExxonMobil, and we replace their allocation with the companies that are making it better. The results hit our goals. They are diversified. This is invested in over 80% of the stock market. It's over 1,400 stocks. And then the other 20% is invested in the companies that are actively building solutions to climate change. So at a high level, that's how we build investment portfolios for your retirement account or general investment fund at Carbon Collective. And I bet you're wondering, okay, cool strategy, but how did it do? So we went back and simulated what would have happened if you had used our Carbon Collective investment strategy at the beginning of 2015. Let's check it out. Welcome to the simulation. We compared our Carbon Collective 80/20 portfolio to a portfolio of Vanguard index funds based upon the US market. And what we can see that from 2015 forward, they performed pretty similarly, which is exactly what we're going for. You can see that they tracked, but beginning kind of around 2019, that they started to spread out a bit. Our goal is not to build portfolios that we promise are going to beat the market. Our goal is to build portfolios that track the market, but without a carbon footprint and investing in the companies that are solving climate change. While it certainly feels good to us to see in a simulation like this that our portfolios did better, we have to urge you to remember that past performance, especially in a simulation like this, is no guarantee of future returns. So before we wrap up, I want to address one question we often get, which is Carbon Collective a mutual fund or an ETF? And the answer is no. We are an investment advisor. So we can take, say, your IRA and allocate it into one of our entire portfolios, splitting it between stocks and bonds based upon the goals that you're trying to hit. If you are familiar with Betterment or Wealthfront, we're kind of like that, but focused on climate change. That's what we've been building at Carbon Collective, and we're really excited to launch in the coming weeks. But until then, we're going to be launching our newsletter. James, why don't you tell us about it?
The goal of the newsletter is to be a quick digest of 2 different topics. The first topic is your life in climate change. This is some interesting fact, the math behind why making one decision over another is impactful, or a new framework to think about the world which makes decision making easier. This could be anything from what banks to avoid from a climate perspective, or what's better, paper or plastic, for when you do your shopping. The second topic is going to be what's going on in the ecosystem of climate change solutions. This could be a piece of legislation, exciting new science, a new approach to geoengineering or natural systems management, or a company that releases a new technology that is related to the solutions that we're all trying to see and how they fit into the bigger picture.
Awesome, James. So what do we have in this week's newsletter?
So in this newsletter, we're going to include 2 articles that we're really excited about. One is why divest and why your investments matter. Why moving out of your money out of high carbon stocks or out of oil company stocks in particular and into renewable energy stocks actually has a really meaningful impact. This is something that we hear a lot about. There's been a lot of noise back and forth, and we're throwing our hat into the ring on why this is a good move. The second article I'm really excited to share with you is how renewable energy stocks have beaten out fossil fuel stocks for the last 10 years. No matter how you slice it, you can cut out the current pandemic, which has wreaked havoc on the energy market, and still they have outperformed. We turn the old wisdom of energy stocks are necessary for a well-balanced portfolio on its head by showing that it would have been smarter over the last 10 years to be in renewables. So the second set of topics I'm excited to introduce to you are around the ecosystem of climate change solutions. The first piece of news, which is really exciting, comes from the International Energy Agency, which is a great website for all those data nerds out there. Please check it out. Solar is now cheaper than coal and natural gas in most countries. This is a big deal. Solar has long been thought to only work when it is subsidized, and now that it is cheaper as a standalone technology, we're going to see the cost of new installations continue to fall as people realize that it is a viable alternative. And while for the long term we will need batteries, we've seen those prices continue to come down in the same way that solar's did. Maybe in a few years I'll be telling you all how now batteries and solar solutions are cheaper than natural gas. And the second piece of news, which is a little less intuitive but equally exciting, is that Ford is releasing an all-electric F-150. The Ford F-150 is the most popular car in America. It sells 40% more than its next closest competitor, and that it is going to all-electric means that we might be at that tipping point where more vehicles in the future will be produced using all-electric technologies. When we think about solving climate change, it's never one technology that is going to be either a magic bullet or all we need. It is not solar panels by themselves or electric vehicles by themselves. It is all of the pieces together. Those electric vehicles need to be charged by solar, and we need to be doing things in a more efficient way. It's really exciting to see these events happening in such quick succession.
Thank you, James, and thank you to you for watching. We are really excited to be working on this, and we have a lot more to show. So stay tuned in the coming weeks.